Hello and welcome to the first episode of the new year of GDP, the Gross Domestic Provocation podcast. I'm Jeremy Hudson. I'm here as usual with my fellow New Jerseyan, economist Dan Altman.
Good morning.
And of course, my fellow Brit, well, actually Dan is also a Brit, but never mind. My fellow Brit, hedge fund trader Jason Freeman.
Formerly known as, and also good day from sunny London. Sunny, snowy London.
Snowy London. So we were planning to talk about the affordability crisis today, but obviously there's some recent news that's so shocking that is keeping the Epstein files, Gaza, and perhaps most surprisingly, the sacking of Ruben Amorim at Manchester United out of the headlines. We'll get back to the affordability crisis at a later date, as sadly it's kind of an evergreen topic at this point. So, Venezuela, proper pandemonium. What the hell happened? I woke up the other day and then the US had kidnapped a foreign leader and his wife, and now they're facing trial in New York. International law concerns aside, what are the economic consequences of all of this? I mean, apparently the Trump administration is going to run Venezuela for a bit when they can barely run their own country. Maybe it's not all bad. Venezuela has the largest oil reserves in the world, and apparently the US can just take that, right? And it sounds like the US is after all those rare earth metals in Greenland next to compete with China. Could this actually all be good for the American people? Dan, you lived in South America for a while. Help us with some economic context here.
Indeed, and just returned from a week in Argentina where,
nice.
Yes, people had not any suspicion that such a thing would happen just a couple of days later. But anyway, Venezuela used to be one of the wealthier countries in South America. So did Argentina, but that was 100 years ago. But more recently, Venezuela, through the 60s, 70s, even into the 90s, was one of the wealthier countries in South America. But it was also very unequal. There was an aristocratic class that basically controlled everything. And Hugo Chavez, who was an army officer who had tried to take over Venezuela via a coup earlier in his life, actually was voted into office as president in 1999 and had a mandate to take over the economy and make it more equitable. The thing is, he put into place a lot of policies that were supposed to spread the wealth, but he wasn't terribly good at managing everything from a central planning perspective. I don't know if anybody ever has been. The thing that really helped him was that oil prices rose from $15 a barrel to about over $100 by the time he died in office in 2013. So it was very hard to screw that up. But after oil prices started to come down and Maduro took over, things did get very screwed up indeed. Would you agree, gentlemen?
Yes.
So anyway, Chavez put in place a sort of parallel structure, much like the state socialist countries after World War II, that went right down to the neighborhood level. So think about commissars essentially being part of everyday life at every level and essentially planned economy where the people who were affiliated with the ruling party got all the best stuff. And that's the power structure that Maduro has been able to exploit as well. But the problem is that he's just been such a corrupt and incompetent leader, and oil prices have fallen down, and there have been sanctions on Venezuela. All of that has really contributed to a dire economic situation. The economy was never diversified away from oil. The government relies on oil for about half of its revenue, and it's the vast, vast majority of Venezuelan exports. And now the nation's GDP per capita, the average income, is almost as low as Haiti's, which has been for decades the lowest in the hemisphere. So there's a lot of work to do.
Dan, are you saying that the country with the most oil reserves in the world has one of the lowest GDP per capita in the Western Hemisphere?
That is exactly what I'm saying. I believe Haiti's around $1,100 and Venezuela is now around $1,500.
Wow.
Which is far lower. I mean, talk about a K-shaped situation. Just as Venezuela was falling off a cliff, the other countries in the region, Peru, Colombia, Ecuador, were actually starting to do quite well. Brazil as well, with GDP per capita that was around $8,000 or $9,000. They were becoming really middle class and stable with pretty good bedrock economic policies. And Venezuela was just going totally in the other direction.
It's honestly insane. So, Jason, how have the markets reacted to this so far? Looks like stocks were up mostly the first trading day after it happened?
Yes, they were. But before we delve into initial market reactions, I think it's important to take a step back and let's all laugh at Manchester United, like even harder. I mean, that's probably the more important news of the weekend. So, joking aside, I think it's good. It's important to point out that within markets, typically, in a lot of instances, markets are very inefficient or simply bad at pricing or reacting to political and geopolitical events or shifts in those kind of things overall. And even with more important periodic data releases such as non-farm payrolls, which is the monthly US jobs report, there's an old adage where you say that never trade within the first hour of non-farm payroll release because the initial market reaction is often wrong or a head fake. So with this caveat in mind, let's cycle through like a few things that have happened. So given the focus on crude oil, is probably the most logical and natural market to look at first. So there are two global benchmarks for crude oil. There's WTI, which is West Texas Intermediate, and Brent crude. So both of these, when markets opened overnight in Asia, which is obviously very outside of ours for Europe and the US, that's generally when you get the initial reactions for weekend news. Both of these initially traded lower when markets opened in early trading, but they ended up stronger and closed up around in the region of 1 to 1.5%. So there is a lot of focus
Why do we
on.
think, Jason, why do we think that happened? I mean, do you think that's a head fake, or what is this saying about medium-term or long-term oil supply? Anything?
Venezuela has one of the largest untapped reserves in the world. But when you actually go through the detail of what those reserves are, it's actually heavy crude. And heavy crude takes a long time to process. A lot of markets will react to the initial headline banners of, wow, there's going to be a lot of crude that's going to be dumped onto the market. But then we look through the detail and you'll actually see, well, it'll take a long time for that crude to be processed. There's a long time for that to actually come to market.
So the short-term reaction seems like it was, oh, Venezuela's oil is going to be unlocked. There's going to be a lot more on the market, so prices drop. But then oil prices end up going up when people realize, maybe that's not going to happen right away. And actually, Venezuela's exports could fall even further if this U.S. blockade stops them from exporting while they figure out the political situation. And if there's greater volatility in terms of global trade generally, and security and insurance costs go up, everything, maybe that makes it harder for the oil market to run worldwide. Is this something that could have that kind of implication?
Yes, it can, but again, it's early doors. So Venezuela produces less than 1% of the global oil output, which, as you mentioned, is with exports constrained by US sanctions and naval blockade. But the country, as we discussed, holds 17% of the world's proven crude reserves. Now, this crude is heavy crude, as we touched upon earlier, and it'll take a lot of infrastructure and refinery spend to even extract it out of the ground, let alone before it can be sold on the open market. So hence, realistically, there won't be a flood of crude or cheaper petrol or diesel hitting the market or our listeners' petrol tanks anytime soon. But perhaps the price action, as you just touched upon, reflects increasing global geopolitical uncertainty with that close higher into the day. How will Russia and China respond to this move by the US? Which country will the administration target next?
So what about portfolios, Jason? Which assets are the ones to watch now?
It's similar to some of the issues we've touched upon in prior episodes when we discussed hard assets. And in relation to that global uncertainty and large debt levels in the West, we saw moves higher in things like gold, which went up 2.5% on the day, and industrial and other precious metals. So going back to what you touched upon and what we discussed, there is an element where we are entering an era of increasing global geopolitical uncertainty, and then people are actually like flooding into hard assets. So stock markets were also an interesting reaction because we're in the early phase of a new tax year. So when we hit January, stock markets have a seasonality effect where they generally go higher. That's because there's just new money put to work for the tax year. So what we did see is energy stocks leading gains across the board. So Chevron, which was up 5%, they were seen as one of the biggest beneficiaries because it's actually already got a presence in Venezuela. And obviously the notion of the company would benefit from rebuilding Venezuela's oil infrastructure. So, but then again, rising geopolitical uncertainty should be worse for stocks and should be worse for equities. And obviously they respond in a different way. Commodities and hard assets are telling us that the geopolitical concerns are much more prevalent and they're telling us a different story. So, recent times we look across assets, we can't conclude anything. It's a bit early in terms of like what's actually going to be the near term path.
Okay, so when we see oil prices rise and we see the price of things like gold rise at the same time, that definitely suggests that the overall effect is geopolitical uncertainty, not necessarily that much to do with Venezuela itself. except for one or two companies that are already involved there. But geopolitical uncertainty is kind of nothing new for the stock market. It seems like other things are driving the stock market. So
Correct.
maybe that's why we see a bit of a divergence there.
Well, then if you're trying to get a near-term path as to what is going to be the medium-term outcome of this invasion or this capture of Madeira, it's a bit more difficult because it has knock-on consequences. So, for example, lots of focus has been in Europe about Greenland because obviously the implications for NATO and things like that. Trump and the administration has been very vocal in terms of that's where they may move next in the next like 6 to 12 months. That will have much more severe consequences for stock markets, interest rates, commodities, and that's a massive change in the established world order. So, yeah, commodity prices and commodity assets are much more accurate at the moment in terms of reflecting that geopolitical shift, one could argue.
Got it. Jason, you talked a bit about Chevron, but are companies actually really lining up to take over the Venezuelan oil industry?
I think it's a bit hard to say because obviously there's been some news that, the administration have obviously been speaking to a lot of the oil executives and that they have been allegedly involved with discussions with people within Venezuela itself. But again, I think along with the other prices that we've talked about and stock market reaction, it's pretty early to start talking about the companies and the sectors in this context, because the global price of crude versus historical context is actually a very low and suppressed level for reasons even more complicated than Amarin's 3-4-3 formation at United.
Hey, Palace won an FA Cup with that formation, by the way.
Really?
Yes, it's the same formation.
Is it the same formation? Oh, there you go.
That's why they won him as manager.
There you go.
Antonio Conte won the league with that formation, and then everybody copied it, and then it wasn't a big deal anymore. But anyway, what I was going to follow up on is if you're talking about heightened uncertainty and which companies might be helped by that, it seems like the companies in the military and security industries are ones that you would look at, especially if there are possibilities of more military adventurism by the United States and possibly other countries that are supplied by United States companies. It seems like that heightened uncertainty is so related to the geopolitics that only the companies that traditionally benefit could actually see increased revenue. And to be honest, when we've looked at wars that the United States has been involved in over the past few decades, it's almost always been good for the stock market. There's always a little bit of uncertainty about how are things going to shake out, and is the U.S. going to be able to contain this conflict, or is it going to have repercussions on U.S. soil? And it really hasn't. And so it's really those companies that benefit from war that have driven the market in those times, and we could see that again.
So is this like looking at the Iraq conflict a while back? So these companies like Halliburton, is that what's sort of like your attention then, Dan?
Yeah, and also the companies that manufacture a lot of the munitions. Those munitions tend to get used up pretty quickly, and so they always need to be restocked. And then other countries in the regions of these conflicts want to have more defensive apparatus, and all of that just leads to bigger orders for these military contractors. The Iraq War was interesting because the uncertainty that built up to it, starting in late 2002 and into early 2003, really did paralyze a lot of investment and hiring decisions. So it wasn't that great for economic growth. But once the early part of the conflict was over and people said, oh, well, this is going to be an open and shut kind of thing, then the economy grew quite robustly and the market went on an enormous rally.
But then again, if we look at the Iraq situation, and those kind of other adventures abroad, and that required a lot of government spending. How much was spent by the US in Iraq? Was it a region of like $1 trillion, $2 trillion?
Yeah, in fact, it still is generating more spending because we have to take care of the veterans of that conflict. It's funny, actually, looking back in late 2002, a guy named Larry Lindsey, who was a pretty decent economist who worked in the Bush White House, and he thought it was going to cost about $200 billion to execute or prosecute the conflict in Iraq. And he was tossed out of the White House for saying that because we're trying to keep the estimates far lower than that. Well, in the end, it cost about $1.8 trillion for the conflict itself and everything that the U.S. did in Iraq, and another $1.1 trillion on top of that on veterans benefits and counting. So, from $200 billion that got Larry Lindsey kicked out of the White House, we're now up to $3 trillion. So, there's potentially an enormous cost associated with this for the U.S. government. And as we know, the U.S. government is not in the best of fiscal situations. So this could be something that ends up pushing up long-term interest rates as well. But that becomes fairly speculative. We just don't know what this kind of engagement is going to look like and how long it'll take.
Correct, it's too early. But again, as we've touched upon in prior episodes, the GDP dynamic is a huge thing versus when, the military engagement in Iraq versus the time now. What is there? I mean, is there going to be willingness to actually put troops on the ground? If there is that much oil to be extracted out the ground from Venezuela, it's going to take a lot of infrastructure spend. That's going to require like troops on the ground. How's that going to actually work in terms of government spending, in terms of military spending, in terms of are oil companies going to compensate the US government for that? I mean, it's a lot more complicated. But then that does point to, as you said, longer, higher term interest rates. When interest rates and the spending of long term interest rates and spending are arguably in the precipice of being out of control. So I think the marginal ability or marginal desire for US to have boots on the ground is a lot more diminished versus Iraq, say, 20 years ago.
Well, in terms of the U.S. ability to afford it, yes. When the United States was going into 2001, the beginning of that Bush administration, the United States was projected to run surpluses over the coming decade and basically pay off a lot of its debt. With the combination of 9/11 and the recession, the dot-com bust, and then the Iraq conflict erased all of those. But we still had a pretty good starting point from which to spend all that money, whether you agree with how we spent it or not. Now we're in a vastly different situation. Debt to GDP ratio is 120%. We're running enormous deficits. Projected deficits for the next 10 years are still over $3 trillion, close to $4 trillion probably. And so if we were to do another Iraq, we would double that, and it would be disastrous for the U.S. fiscal situation. So I don't think that people are in a rush to spend the money, but I'm also not sure that the administration's even thinking in those terms. And when we think about how the arrangements might be with companies that stand to benefit from this, the administration has shown a lot of appetite to take stakes in American private companies. So they may say, okay, well, now we own 20% of Chevron and you guys can manage the Venezuelan oil industry or something like that. We just have no idea. Everything is on the table. And in terms of the willingness just to engage in this kind of conflict, I'm not a political analyst, but if you're willing to kill 80 people just to get one guy out of Venezuela, I think you're willing to kill a lot more people to take over Greenland.
On that note, it's obviously early days, but I think the question everybody wants to know is what do you guys think is going to happen next?
So it's a lot of the things that this administration seemed to engage in terms of their modus operandi is almost testing the water and seeing kind of the international reaction to various things, and then basically proceeding along whatever path they've outlined for themselves. So the international reaction to this has been fairly muted, unsurprisingly. And then you've obviously had the people within the administration, the president himself, then reiterating their desire to actually, annex or secure Greenland for their borders. So the interesting reaction, I think, so far in Europe has actually been what's going to happen to Greenland. So Greenland, that's been all over the news over here versus what you would probably see in the US. Every political program, every radio program, every flagship news show, ex-politicians, ex-cabinet ministers have been on discussing it. Because if the reaction function in terms of EU and UK leaders has been very weak on the Venezuela issue, it's likely to be also very weak on the Greenland issue. And if there are obviously further consequences, if the US actually annexed or somehow got more involved or secured Greenland for its borders, obviously it's part of Denmark. Denmark is a NATO ally. This has consequences for the entire NATO organization itself, and that's been much more the focus in Europe and the UK at the moment. So they're running pretty scared in terms of what the administration have done so far, what their rhetoric is actually coming out from now. And that could actually have some very huge consequences.
Yeah, I mean, what are the economic consequences of all this Greenland and NATO stuff?
I think a big part of it is just the stability and reliability of global commerce. We are used to a situation where ships and planes can move around the world fairly easily, and we are always trying to negotiate trade agreements to reduce barriers, and all of that has totally changed in the past year. we've already seen disruptions. There were a lot of people who were stranded in the Caribbean while the airspace was closed, at least to American planes, just for this hours-long operation in Venezuela. Can you imagine if transatlantic shipping were disrupted by a Greenland conflict? That would be a much bigger disaster from an economic point of view. Can you imagine if that was followed by active Chinese military engagement around Taiwan and a renewed offensive into Ukraine by Russia? This starts to make global commerce much more complicated, the flow of commodities, the flow of production goods. And so it's bad news for the economy from that point of view. As I said, there are a few companies that stand to benefit. But as far as the cost of things that you will buy every day, those would definitely increase if global commerce were to get snarled by these types of conflicts.
Well, there's an argument in the sense that, a lot of these actions in terms of and what the administration have said is that they're potentially securing, resources, commodities, oil. There's some talk in on the Greenland example that it's a grab for rare earth metals, which obviously a lot of the tech industry is reliant upon. That's not necessarily the case because, a few people have pointed out that the Greenland have been quite open with US companies in terms of allowing them in to mine for those rare earth metals. So maybe that is reality is a bit of a falsehood, and maybe it's just simply an old school expansion of U.S. territory that prior presidents in prior epochs have actually managed to do. I mean, was Florida? I mean, Dan, you probably know better than me, right? Was Florida somewhere purchased from somebody or the other? Was it like
Alaska?
Yeah. So it could just be simply that. But it clearly is a massive deconstruction of the established global order that we've all grown up with in terms of globalized trade, in terms of links between Europe and the US. And that's going to be a massive shift and a massive readjustment if that does happen. If the US leaves NATO and that does actually happen and Europe is now a block on its own, they're going to have to be much more independent in terms of their own military protection, their own armies. That's going to have to be built up again. The US has been a massive partner for them, so that's a huge change.
So while Greenland may happen soon, what do you guys think is going to happen next with Venezuela?
Gosh, I hope Greenland does not happen soon.
Don't we all?
It seems like there would be a lot of senseless loss of life in that situation. And to follow on to Jason's point, I think a lot of this is territorial ambition. It's funny because people say, oh, this was really about oil, and they feel like they've seen some real cynical truth that's underlying everything. Actually, I think the truth is even worse. I think it's just stroking the president's ego, and he wants to have this imperial presidency where he takes over land. The political situation in Venezuela is really uncertain right now. We could just have a situation where a pliant Delcy Rodriguez, who's taken over as interim president, talks a big game to her local constituents, but is actually willing to follow U.S. instruction, and things are relatively peaceful. We could have a situation where the Venezuelan opposition sees this as their chance, and there are protests that eventually turn into conflict. And the United States, if it wants to, has to get involved in a civil conflict, much as it did in Iraq. It's really all on the table, I think, at this point.
So I think one aspect of it, which is not been that focused upon in terms of media reports I've seen, is actually the Russian and China reaction. I mean, they have reacted in terms of statements, but they necessarily have reaction in terms of actions. So for China, for example, they have a massive Belt Road Global Initiative where they've invested a lot of money in emerging market nations in terms of building infrastructure and helping them access their resources. And obviously China has some sort of quid pro quo agreement with a lot of these nations in terms of access to their mineral rights or their hard commodities. So allegedly, China has something on the region of like $100 billion worth of loans into Venezuela over the last few decades. What does happen to those loans? Now you have a kind of pro-US stroke administration, stroke US military presence on the ground. I mean, does that mean the US targets other Belt Road countries that China invested in? How do the Chinese react to that as well? That's all up in the air at the moment. And I don't think necessarily, the administration has actually thought those aspects of it through. Maybe they have thought it through, and maybe this is part of their overall plan because it does destabilize China and Russia. But again, we're really in the early days for all this sort of stuff now.
Well, what a start to the new year, guys. I'd like to say things can only go up from here, but who knows? Dan?
I think they can definitely get worse. You know, in my high yield economics newsletter, I put out an economic outlook for 2026 at the end of last year. And I was pretty optimistic because I thought if some of the trade policy finally settled down and there wasn't any more big legislation coming out of Congress, that the economy was in a pretty good place to grow. But I put a caveat, which was if nothing crazy happens. And it took 2.5 days for something crazy to happen. I don't know. Toss it out. The sad thing, besides the obviously sad things like all the loss of life, is that we have all this new uncertainty and possibly more conflict to come.
Yeah, it's quite a sad thing in the sense that loss of life is always horrible. But going back to the Greenland thing, one of the really more important, well described political shows actually pointed out that like if the US does move into Greenland, there's no way that we're going to see French and German and UK troops firing on US troops for like over the population of say 30 to 50,000 people in that land. It's just never going to happen. And I think the rhetoric administration in the last 24 hours, they're very aware of that. It's going to be interesting, like next few months or weeks to see what happens.
All right, guys, that's all we have time for. We'll almost certainly come up with a follow-up podcast when, we get more news about this. See you next time.
Take care. Be safe. Off to betting shop to see Man United get relegated.